Hello, everybody. My name is Zishan Hassan. I'm a tutor of Advanced Audit and Assurance from accountancy.com. Okay, in this video, we're discussing one of the recent technical articles in AAA, Advanced Audit and Assurance, right? And it is related to the assurance of social, environmental, and sustainability information, which is the newly introduced topic in Section F of the AAA syllabus. So, firstly, we need to discuss about the need to measure and report with considerations for assurance professionals. Um, Auditors may be asked to complete assurance engagement on non-financial information, and this is um, increasingly likely to include the review of management reports on social, environmental, and sustainability information. When management provides this types of information, it is known as extended external reporting, which is a requirement for a listed and larger private companies in some of the jurisdictions. In addition, many companies wish to provide additional information on the environmental impact of their operations on the environment due to the pressure of stakeholders. Okay, there are challenges in undertaking such as engagements, and although this can be highly specialized area, there are still steps that the assurance provider can take to mitigate these issues, right? So we will consider the main reasons why companies produce these reports and the various methods of measurement use. Auditors may be asked to review the information as part of their review of the annual report or as a separate assurance engagement. Okay, so firstly, uh, we need to know why is there a need for companies to produce these reports. National reporting requirements. Some regions require specific size companies, larger, for example, larger listed entities usually, or those in specific industries to report on their environmental, social, and governance information. For example, corporate social reporting directives, CSRD, is a legislation uh, in the European Union, okay, requiring all large companies to publish reports on their social and environmental impact activities. UK premium listed companies must report their compliance with the task force on climate related financial disclosures recommendations for period commencing from the 1st January 2021 onwards. This is already effective in New Zealand and Japan, by the way. Okay. Then stakeholder needs. Increasingly, shareholders, especially larger investors like pension funds, are demanding more information of the impact of the company on the environment and society. Voluntary disclosure. Companies may seek to gain a competitive advantage by declaring their green credentials. Such as voluntary disclosure may be subject to management bias as the reporting requirements are not specified under legislation. Okay, companies can choose to include this type of information within their annual report or to produce stand-alone reports on social, environmental, and sustainability matters In particularly in the last decade, integrated reporting has become common, which aims to provide a holistic view of the company's financial and non-financial performance and its potential for the long-term creation. Now, measurement on social and sustainability information. So the measurement of social and the specialized information can be problematic because sustainability or environmental indicators may be report in different ways, even within the same industry, and say several differing reporting standards may be used rather than a single global reporting basis. And in 2022, the sustainability standards ISSB commenced a consultation of two proposed sustainability standards. In 2022, International Sustainability Standards Board (ISSB) commenced a consultation on two proposed sustainability standards: one regarding general sustainability related disclosures, and one regarding climate related disclosures. There are a variety of different key performance indicators. Metrics is used, and comparison between companies and industries is challenging for the following reasons. Number one, rapid change in EER requirements and disclosure principles, diversity of subject matter, lack of single reporting basis for non-financial information, additional risk of management uh, bias due to subjective nature of measurement in many cases, and selection of criteria being presented. Okay, for example, as you can see, greenhouse gas emissions, waste minimization and management, finite resources consumption, oil, gas, coal, minerals, forestry, supply chain sustainability, water and pollution, employees, welfare and equality. Okay. Now we have to look at considerations when planning and assurance engagement. You know, as with any assurance engagement, the audit should consider the impact of risk on the planning and performance of the engagement when faced with planning and assurance engagement on non-financial criteria, such as those related to the environment or sustainability. The fundamentals of existing auditing and assurance standards may be used as basis for the engagement team. Okay, sustainability information. Sustainability information may be supplied in annual report alongside the financial statement. It is worth bearing in mind that there is an expectation gap risk occurring as some users expect that all information in an annual report is subject to the detailed assurance process by the auditor. Now we have types of engagement. One is review of the contents of annual report as part of the statutory financial statements audit engagement. And number two, independent assurance engagement. You know, over non-financial information which is outside the statutory financial statements audit, and this is covered in which we'll consider. Okay, we will look at in detail as well. Now, review of non-financial information which is part of the annual report, such as the strategic report. So, guidance on the review of non-financial information as part of the annual report is covered by ISA 720 revised. Auditors need to consider whether there is a material inconsistency between the other information and the financial statement. So, auditor need to consider all auditing standards, but a few key ones which may be relevant to the review of other information. Okay. So, for that, we need to consider auditing accounting estimates and related disclosures. The point which need to look at in this regard is management bias. This may arise in both the calculation and the disclosure of information, especially if the information is provided voluntarily by the company in order to gain a competitive advantage. Number two, appropriateness of methods of calculation, whether the basis for the estimations are reasonable and appropriate. This may be an issue where there are no industry standard measurements established and management is responsible for deciding on the parameters of the estimation. Considerations of laws and regulations in an audit of financial statement. So if the requirement to report is required by legislation, there may be financial penalties or reputational issues for failure to report correctly for both the company and auditor. If there has been a breach of regulations, for example, if any environmental disclosures are not given, there may be implications for the financial statement, such as provisions of for fines, such as provision for fines. Okay, this increases audit risk. Breaches of laws or regulations may even impact the ability of the company to continue to trade. For example, license to trade may be subject to adhering to laws and regulations, or fines or penalties may be substantial enough to significantly impact the cash flow of an entity. Um, Identifying and assessing the risk of material misstatement. Assurance provider need knowledge and experience and subject of the subject matter, industry and subject matter. This may be highly specified area, for example, greenhouse gas emissions, chemical levels in waste, etc., or using an EER expert to manage the assurance process. There may be industry standard measurements which are used, for example, criteria may be more widely recognized, such as greenhouse gas emissions. Internal controls of the client, uh, consideration of reliance which can be placed on the information, whether this information is internally or externally generated. Information from third parties, this could include environmental bodies, governmental or private, and reliance which can be placed on the information. And finally, evaluation of misstatements identified during the audit. Omission of information, both financial and operational, for example, the impact of business interruption due to pollution, environmental damage, or industrial action by employees, suppliers, or third parties, such as environmental protesters. Consideration of whether the omission of such information may affect the users of financial statements. This list is not exhaustive, and other auditing standards may need to be considered in order to obtain the relevant sufficient audit evidence in the audit engagement. Okay, uh, so far so good. Now, independent assurance engagement on sustainability information. It is a part two, which we are looking at, of the assurance of social, environmental, and sustainability information. So, independent assurance engagement. The assurance provider will need to consider the scope of their assurance to be provided, whether it is limit or reasonable scope engagement. The engagement should plan to assess the scope, timing, and direction of the engagement, and to ensure that the procedures will enable the team to gain sufficient appropriate audit evidence. Providing assurance of performance measure. The assurance provider faces some challenges in reviewing and providing assurance on non-financial performance measures. Information internally generated. There may be deficiencies in the control and internal tools used by the company to collect and measure the information. The controls may not be as established or robust as those within the financial reporting system, which is more familiar to assurance provider. Information from third-party sources. This may include information from sources such as entities within the supply chain, for example, suppliers and contractors. External agencies, for example, carbon offset registries, industry benchmark specialists, external carbon dioxide calculation tools. The reliance which can be placed upon the evidence from the third party. Sources will need to be assessed by the assurance provider using their professional judgment. There will need to be an understanding of how the information is collected and what, if any, recognized standard it adheres to. This is an area where the use of an independent expert may be required in order to identify whether any specialist information is consistent and relevant to industry. Now, substantive procedures to detect potential misstatements, social, environmental, and sustainability matters. Okay, for that we need to consider what are the tests of controls. We will perform tests of controls, and we will perform substantive analytical procedures such as ratios, trends, comparative information, etc. Okay, so here are a few examples. Review of any findings in the financial statements to see whether the company has incurred financial penalties as a result of environmental breaches. Inquire and review the legal documentation, including legal expenses, to assess whether legal advice was sought in response to breach of regulations. Okay. Um, Significant issues may be reflected in press or by third-party whistleblowers. Number four, if wastage increases, may an increase in the cost per unit. This may be assessed by a review of the cost per unit and whether more material is required to manufacture the unit. Performing analytical reviews of the cost may highlight potential issues in the area. Now, professional skepticism may need to be applied to mitigate the risk of management bias in the reported figures, especially where there are significant impacts on the business. If the report is to be relied upon by third parties, such as financial institutions, government bodies, or those issuing license to trade, which is common in regulated industries like energy production and supply. Now, the form and contents of independent verification statement of integrated or sustainability information. These include the content of the report, the scope of the report, and reference to the national and international standards. Right now, finally, we will look at the exam technique to tackle the questions on this area. Firstly, read the requirement carefully. Consider whether the engagement is part of the statutory review of the annual report and the application of the ISA 720 is required or a separate insurance engagement. Number two, evaluate the risk in engagement and consider how may the assurance practitioner mitigate this. Think about some of the problems faced by the assurance providers, such as challenges in measuring and comparing information across companies and industries, application of knowledge of auditing and assurance standards such as those stated above, although some of scenarios may also benefit from reference to other standards, may when asked to review or provide assurance on report. Justify the responses. If procedures are requested in the exam, then consider what reasonable evidence may be obtained and why it is that this is being reviewed. Right? So that's it for this topic. You must look at this video again and again because there are high chances that this can be tested in your upcoming exam. If you have any questions, you can ask me in the comment of the video below. Till then, take care. Bye bye.